let's talk about COP28.
We see the geopolitical poles kind of shifting in this direction.
Last December, I met Harburg on the sideline of COP28 in Dubai, the United Arab Emirates. And months later, he's here in Beijing at the China Development Forum. As member of the board of directors of the National Committee of U.S. China Relations, what's his takeaway from the forum and where does he see China-U.S. relations heading? Let's take a listen.
Ben, welcome back to China. I want to start by getting your sense on Premier Li Qiang's speech yesterday. What are your major takeaways?
Well, I think it was, what we've heard before, but it solidifies those narratives that are kind of being countered in a lot of the Western media, which are that China remains the world's largest consumer market, the world's largest manufacturing market, that it's an inextricable piece of the global supply chain, and just the importance of the Chinese economy going forward and the damage that decoupling and other forms of subjugation might affect it.
You've been attending CDF for a number of years. What's different this year?
It's a very different feeling than last year. A much larger American and Western business presence, much more public. Last year, for instance, Tim Cook was very quiet and kind of came in the back door and snuck out after a short meeting. This year, giving a very prominent speech and speaking about sustainability. It feels like there's less shame from the West in terms of participation in this conference and maybe more of a harder push from the Chinese side to get those Western participants. So,
as an investor and observer of China policies, what is your sense of the China market? Where is it right now? How are you positioning the China market going forward?
It's been a really challenging few years. It's been challenging to attract capital to China. It's been challenging to get global investors to feel confident about investing here, particularly when the U.S. stock market is flying. It's also been hard to convince folks that the Chinese economy is healthy like it used to be, that Chinese consumers are going to participate in the market like they used to. There's fears because of the devaluation of assets on the public markets, real estate. So it's really been a time of cleansing for us to think about bottoming out the market, looking at the fundamentals here, again, the size of the consumer base, the size of the manufacturing base, and then looking at these as lows that then can be built upon for really strong returns going forward.
There are so many theories going around. One says the China model is running out of steam, China is peaking. Do you look at it that way?
No, I don't. I think there's so much greenfield for China still to grow. Manufacturing can get hugely more efficient and, of course, more sustainable. As a consumption-led market and one domestically led, Chinese consumers are still just coming to their own. There's a huge consumer base still to be brought online as we urbanize China and bring up more rural populations into the major cities. And the numbers that I hear from my colleagues that are running international businesses here in China are phenomenally strong. So, for instance, I was talking to a friend who runs Disney in China, and they said they've been sold out for the last 100 days for their parks in Shanghai, even in the midst of winter. And so just these kind of anecdotal stories around the consumer demand here show that there's still very healthy buying going on.
Yeah, also, Ben, tell us a bit about your peers and your colleagues that you've been talking to. I see you catching up with some friends, multinational company representatives here in China. What is their sense by talking to them about the China market and about being in China, investing in China?
Even last year, during some of the kind of more negative periods, a lot of them were still quietly doubling down on the Chinese market, doubling down on their manufacturing capability, doubling down on their investments here. And I think that now is continuing to accelerate. We're hearing really strong narratives around China consumption. China, from a manufacturing base, still is unmatched. You heard Tim Cook yesterday saying again that for them to be a sustainable business and for them to continue to improve their supply chain, they have nowhere else to look but here. And so I think that gives folks a lot of confidence because China really is the global leader when it comes to that fourth industrial revolution, robotics, EVs, solar, all of those core components need Chinese supply chain and manufacturing.
Talking about China-U.S. relations, Steve Orland's, his sense is that U.S. China relations is stabilizing somewhat, and in all likelihood, it could be bottoming out. What is your sense of where China-U.S. relations is?
I think it's going to be a continued war of attrition. So you're just going to continually see volleys from Washington around specifically targeted actions, particularly against Chinese business or political interests to maintain American incumbencies, be they political or economic. I don't see things necessarily improving, and we're going into obviously an election year where things could actually get worse. The outcome of the election will be interesting because if there's a Trump administration, we could see a more binary outcome when it comes to China. If it's Biden, then we're going to see kind of more of this continued attrition.
Are you going to meet the Chinese leadership this time around without spoiling some protocol?
We'll certainly try to see some of the high-level folks and get a sense directly from them, their sentiments around the market, what the actions they'll be taking to support global businesses in the private sector here. It's critical for us to understand that.
China announced a series of measures, including unilaterally waiving visa requirements for more than a dozen European countries and some in Asia Pacific to reassure foreign investors, tourists, students. Are they working? What would be your advice for the policymakers?
So there's certainly China's open for business. There's no doubt about that. My only fear is that a little bit of it is a little too late. A lot of that trust that was broken over the last 4 years is going to be a bit harder to mend. And really, though, what overcomes all of those trust issues when it comes to the China economy is performance. If the Hong Kong stock market is performing the way that it is, China A shares the way that it is, and Nasdaq and the NSE are flying, it's going to make it a very hard sell. And so China, I think, focus should be more on improving the economy, improving support for the private sector. It sounds like we're not going to get a stimulus, but other measures that can give and drive consumption in the market, give consumers a feeling of confidence to buy more. As that improves share prices, that will draw people back to the market.
New quality productive forces have been a buzzword in recent Chinese policy meetings. What is your understanding of it, and how do you see that playing a role in China's economy?
So I think that China, being a smart manufacturing lead, one that's highly automated, one that utilizes AI and other kind of core technology inputs to continuously improve its efficiency, is a key component of the Chinese economy. And I think China's already doing an incredible job on that front. But there's obviously still further room for growth, and that's clearly a policy focus of the government.
Ben, thank you so much.
Thanks for having me.